Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup space. Logistics platform Let's Transport raises $22 million in a funding round led by Bertelsmann India Investments. The company says it is already profitable at a city EBITDA level. With this raise, it will be on track to achieve PAT break even by 2025.
Plain and open source project management platform secures $4 million in a seed round funding from OSS Capital. This investment will fuel the company's community growth and help it compete in the enterprise segment.
Boba tea brand Boba Bhai raises 12.5 crore rupees in seed funding round from Clientel Capital and others. This marks its first institutional fundraising round since inception in 2023, and the funds will be used for hiring, product expansion and presence across India.
Tesla reports a 9% drop in revenues in the first quarter, the steepest year-over-year decline since 2012. Revenue declines from $23.3 billion a year earlier and from $25.17 billion in the fourth quarter. Elon Musk on the earnings call said the company plans to start production of new models in early 2025, if not late this year.
The US Senate votes by a wide margin in favor of legislation that would ban TikTok in the United States. This if its owner, the Chinese tech firm ByteDance, fails to divest the popular short video app over the next 9 months to a year. The bill was passed by the US House of Representatives, and President Joe Biden has said he will sign it into law. Those are the headlines that we're tracking for you this evening on What's Brewing. Direct-to-consumer beauty and personal care brand Nat Habit has crossed the 100 crore rupee mark in terms of its annualized revenues between FY23 and FY24. The brand, which raised $10.2 million back in December, has been strengthening its presence online marketplaces and focusing on expanding its product portfolio. Joining us now to discuss the growth plan is Swagatika Das, the co-founder of Nat Habit. Swagatika, it's great to have you back on the show today. And congratulations on passing this 100 crore rupees in ARR for the fiscal year ending March 2024. Why don't you tell us what's worked for Nat Habit in the last year and what's contributed to you achieving this milestone in such a crowded market?
Thank you so much for having me. Like I've always said, it's the products, and products. There is just tremendous amount of R&D that goes into a product, and that results in customer love. And that's what's seen us cross this immense milestone.
So it's product. We'll discuss your products in detail going forward, but you aim to turn EBITDA profitable over the next 17 to 18 months. So where will the next leg of growth come from? Talk to us about the targets you've set for yourself over the next year.
So we're looking pretty much at expanding our product portfolio. We still have some very large categories to enter into, which is like a shampoo or hair color. And the second leg of growth is going to come from offline. We will be venturing into offline trade very, very soon.
All right. So like you just said, you're looking to expand your current product portfolio across hair care and skincare. So what's in the pipeline? Would you look at venturing beyond hair care and skincare in the future?
So for now, personal care is a very, very big focus for us. We just have about 1.5 to 2% market share in the online market. We are looking to build that piece up first. Of course, there are segues into baby that has been happening. It's a natural segue. There will be some beauty products out there, but the focus is still very, very heavy on hair and skin.
So looking at baby care, but hair and skin care is your main focus. Now, you have a strong presence across tier 1, 2 and 3 cities, right? And you're serving over 14 lakh customers. So how many units are you shipping per day? And what's the average order size for you? And which product is the customer loving at this point?
So we ship about 15,000 units on a daily basis. We touch about 15 to 17 lakh customers today. Of course, it's hard to pinpoint the exact set of customers, but this is all surveyed the range. What exactly is selling? So people love our hair care range and our Malai range. So Malai extends from face to body to hand. These are like the two big ranges that people fall for.
All right. So those are the two big ranges that people are loving at this point. Currently you're seeing 55% of your growth coming from your own D2C side and the rest from your e-commerce marketplaces that you've pushed and put a lot of focus on, right? So are offline channels an option given the fact that your products have a short shelf life?
Right. So we're not going to be pushing, our products which have about 2 months life or 3 months life. We're trying to take products which have more than 6 months life. For example, our oils, some of our face washes. So those are going to be the ones that we'll start off with. Once we, stabilize our supply chain, we'll figure out a way to take even the shorter shelf life ones.
All right. So how soon will we see a Nat Habit store in the market?
The store is perhaps a little far away. We're focusing on trade first. But yes, you will see us on stores of multi-brand retail, your favorite shops out there.
And how soon will we see that happen?
In the next 4 months.
Okay, in the next 4 months, we'll see you in stores then.
Yeah.
Now, with the ARR target that you've set for yourself over the next 2 years, right? What about manufacturing? It's currently in-house. Would you look at outsourcing or building more units? What's happening on the manufacturing front?
So we're very, very particular about this, and we're very sure about this. Manufacturing is going to stay in-house. We have built massive tech capabilities and modularities into the manufacturing system that allows us to scale rapidly. So within the same facility, we'd be able to grow 5x without any issues. So manufacturing is going to stay in-house.
All right, so manufacturing is going to stay in-house and you'll be able to scale 5x within the same unit that you have.
Yeah.
All right, Swagatika, thank you so much for joining us on the show today, and we wish you all the best on this journey.
Thank you so much. Thank you again for having me.
Well, up next, Bengaluru-based EV startup Ultraviolette Automotive today unveiled its upgraded bike, the F77 Mach 2, priced at 2.99 lakh rupees for the first 1,000 customers. I caught up with its co-founder and CEO Narayan Subramaniam earlier today at the bike's launch. Take a look at what he said. High-performance electric motorcycle maker Ultraviolette Automotive today launched the F77 Mach 2 model, which is an upgrade on its flagship F77 bike. So to talk more about this new launch and how the company plans to take on this competitive market, I'm going to be speaking with its co-founder and CEO Narayan Subramaniam. Start by telling us about some of the key features and the upgrades that you've brought in with this bike.
So before we get to that, the F77 already was the fastest, the most powerful, and came with the highest range in the country. And that was already setting the benchmark for electric vehicles. And now we've sort of shattered all of those barriers. We've gotten further advancements in each and every one of those categories. So the torque now stands at 100 Newton meters, and that is an incredible amount of power for you to have within the tap of the twist of the throttle. And the range today stands at 323 kilometers. And to give you some perspective of that, that is nearly 2x of where the rest of the two-wheeler industry is at in India.
Okay.
And 323 exceeds what a full tank of petrol can get you on a nice motorcycle.
All right. Just quickly tell us how soon you'll start delivering this. What is the manufacturing capacity? And then we'll get to the pricing.
Sure. So we are here at the Ultraviolette manufacturing production unit, and what you see behind you is the production lines for the vehicles and the batteries. So the production is already in progress, and availability of the Mach 2 will be as early as May 24, which is next month.
All right. And what is the capacity? How many bikes can you produce annually? Are you planning to scale that up?
So we are planning to scale that up along with distribution. As you recall, I also spoke about distribution growing across India.
Yeah.
Today we are present only predominantly in Bangalore.
Yeah.
But in the next quarter and a half, we should be across about 15 to 20 different locations in the country. So production is going to scale in line to meet that demand as well. I mean, in terms of numbers, this plant can, in its current state, do 10,000 vehicles a year.
All right, 10,000 vehicles a year. Let's quickly get into the pricing, because that's what the customer really wants to know. 2,99,000 for an upgraded version of a bike that was earlier priced at 3.8 lakhs. But this, we understand, is only for the first 1,000 customers. After that, if you could give us a sense of how this would be priced in the market.
Sure. So the intent here was to, there's a lot of grants, subsidies, etc. for mass products, and we wanted to get some sort of intent towards that from a high-tech and performance perspective as well. And that is the Carbon Farewell Fund that we at Ultraviolette have introduced. So like you rightly said, the price starts at 2.99 lakhs for the Mach 2 variant, which is, yes, of course, significantly more accessible price point from a consumer perspective.
Speaking of the market, you spoke about expanding your distribution within India, but as of last year, you announced your foray into the European market as well with 5 countries. Tell us how the response there has been so far, especially with your F77.
So the response has been phenomenal. If you recall, we unveiled the F77s for the first time in 2019. So we've got several of thousands of interests that have come in from different countries. Today we have tangible data of interest coming in from 190 countries, right? And which is what, even at that point, gave us the confidence that this is a global product and a global disruptor. So yes, Europe is going to be our first foray outside of India. And this means a lot, not just to Ultraviolette, but to India as well, for a new age startup to create a pipeline of an ecosystem to export high quality, high performance vehicles to the other geographies across the world. So,
quick word on how F77 has done so far. Could you bring us up to speed with the sales you've clocked in here and in your markets outside? What are the targets?
So we have not begun sales outside India yet. We've launched and unveiled and launched the vehicles. We should be seeing that kicking off in the next quarter. Bangalore predominantly has been our point of sale today, and retail presence today exists in Bangalore. I think there's a few hundreds of vehicles on the roads in Bangalore already, which is what we had the data for. 2 million kilometers covered by the F77s. A few vehicles were also shipped by Ultraviolette to certain owners in Chennai, Pune, Mumbai, Hyderabad, where people have been waiting for a really long time, 1-2 years, to get their hands on the bikes. We have service presence there, and now sales is going to ramp up in these cities.
All right. If you could quickly tell us about the charging infrastructure as well. We heard about your tie-up with HPCL earlier. How widely present is it? Are you looking at other tie-ups? What are the plans there?
So HPCL, of course, is a huge partner for us to work with in terms of known locations where we can have our supernova charging stations. So yes, so that you don't have to, there's no learning curve in figuring out where I can charge my vehicle. Plus, we are also augmenting that with our own network scaling up, which is the UV Supernova. So I think this is going to be a little more of a phased approach. Sales is going to ramp up soon. Charging also, along with that, as different markets grow, we will prioritize that phase-wise as well. But the intent is to enable or take away range anxiety from a long-distance riding perspective.
Just a final question. You've laid out these ambitious plans in front of us. You raised about 54 million to date. I'm wondering if you're in the market to raise more capital to support these growth plans.
So, I mean, you're right. Venture like this is capital intensive. And we've been extremely efficient from a capital standpoint. We talk about 50 million to get to this point. We have a second product out in the market. I think that kudos to the whole team and R&D to pull this off together. But from a fundraising perspective, yes, definitely conversations are always ongoing. We will let you know when something materializes on this front.
So that's Ultraviolette's latest offering. But on that note, it is time to head into a short break. Coming up next, SaaS startup Clientell backed $2.5 million, led by Bloom Ventures. We put its founder and CEO on the hot seat to know about their fund deployment plans, revenue story, and more. Stay tuned. Welcome back. You're watching Startup Street. Revenue operations startup Clientel has raised $2.5 million in its seed round led by Bloom Ventures. The round also saw participation from Chirate Ventures, Artha Venture Fund, and Silicon Valley-based Z5 Capital. Earlier to this round, the startup had raised $600,000 from Chirate Ventures, Sonic cohort at the end of 2021, co-led by Artha Venture Fund. So how does the company plan to use the funds? We have Sahil Daka, the founder and CEO of Clientell, and also with me, my colleague Ritu Singh. Sahil, thank you so much for joining us on Startup Street today. You know, you're a revenue operations startup. How are you using artificial intelligence to improve productivity, reduce costs of multiple tools for the companies you work for? Tell us what's on offer.
First of all, thanks for having me here, Arundhati and CNBC, of course. You know, I've been watching this show for a while now, and then glad to be here in person as well, right? So basically, in terms of how we're using AI in general, right? I mean, I think AI has become such a buzzword that people start to forget that it's a very varied field, right? You have generative AI, large language models, and different aspects of it. So the way we see it, right, is within revenue operations, which is all the activities that a company does to bring in revenue, there's a lot of manual tasks, right, which have to be done, right? And a lot of that sort of manual work combined with knowledge work can be automated with AI. And then we combine traditional machine learning with generative AI, right? So the way I see large language models, or, you know, a GPT is essentially more of a UI as well as something that can infer text, right? So if I was to say do a particular task, right, I can, as a salesperson or as a marketing person, I can have AI augment that workflow to do 80% of that manual work, and as well as that assist me with some of the knowledge work that I'm doing.
All right, Sahil, hi, this is Ritu. Quick question. This $2.5 million that you raised, give us a sense of how you're going to spend this capital.
Yeah, I mean, so our core focus, of course, is always on, as an engineer or a mathematician myself, it's always on building products, right? But along with that, we're also going to be spending a lot of this capital on sort of, so we're working with a few design partners. We're going to spend a lot of this on expanding our team, our product offerings, and then as well as a lot of go-to-market initiatives that we're taking up, right? So we're partnering with some other companies to sort of go to market with them. We're partnering with different AI providers to essentially understand, what models essentially we could build out, right? So a lot of this money will be spent on R&D, product development, and increasing our team, but also essentially on sort of making sure that, we're sort of getting the right traction in the market as well as our go-to-market initiatives.
On. But, Sahil, what's your current reach? Which sectors are you working across, and how many customers have you onboarded so far?
Yeah, so we're working so in terms of the industries that we're targeting, right? So most of our customers primarily are based in the US, right? We do have a few Indian software companies as well. So we focus on other software companies like ours, right? Because that's where essentially most of the sales are digital. But we do also target from the pharmaceutical sector, right? We do also target some sort of services industries, especially consulting services, right? And in terms of customers, right, we've onboarded a mix of customers both from the large enterprise market as well as a few smaller startups as well as other B2B SaaS startups in Silicon Valley, right? So it's a decent mix of, pharma companies, enterprises, as well as consulting firms and smaller companies, right? And they're primarily spread out across the US and here in India.
Okay, Sahil, since you're in the business of revenue operations, tell us, since your launch in 2021, what kind of growth have you seen in your own revenues? And give us a sense of how the company is expected to grow ahead, even in terms of profitability.
That's an interesting question, right? That's what I ask myself every day, right? How are we growing as a company in terms of our own revenue operations? Now, of course, we're too early to sort of talk about revenue yet because our primary focus was on building models, and that requires a lot of R&D and a lot of, sort of working with. So generative AI itself is a very new concept to the world, right? It's only a couple of years old. So just working around that, building the most efficient product has been our core focus, not so much focus towards revenue, right? It's how do we deliver the value best? Like when I think of sort of somebody paying us for the product, right? In SaaS, you traditionally have your licensing fees. You also have different types of usage-based pricing. What I try to focus on is that AI agents will not sort of interact the same way traditional software interacts with you, right? So how do you then put a price to that, or how do you put a price to the value, right? That's been the kind of question that we're going to answer, right, in the next 1 or 2 years, where we want to sort of, get to a point where we have, a couple hundred customers, and that's when we will focus more on the value delivery as much as just adding value. So in terms of how we deliver value, right, it's done through a platform. We have multiple Chrome plugins. We work out of Salesforce, Slack. Like we're building different kind of plugins just to see where can we add the most value to a customer, right? Like ChatGPT, for example, is a very simple text-based interface right now. If you just imagine how else can you use that, right? In terms of different form factors, can that be something in your Excel? Can that be an email plugin? Can that be a Chrome plugin? Can that be an app? So in terms of how you want to deliver the value is sort of the question that we've been tinkering with for about 2 years. And then I think we're going to continue doing that till the next 100, 200 customers.
All right. So then can you list out like what your key targets are for this year? Where do you hope to end this year? What's the plan for this financial year?
Sure. So I know I recently wrote about this on LinkedIn as well, right? Like our plan particularly for this year is essentially launching the first set of AI agents that we're building, right? And they're pertaining to sort of helping companies manage their sales force. So you can think of them as virtual CRM admins that you can hire, but they're essentially AI admins. So we want to get them to 100, 200 customers, right? In terms of revenue, I don't have a number yet, as I told you, but the approach to how we get that value delivered is more important to me. So what I would like to see is us working with 200, 300 different types of customers, right? And then narrowing down the ICP sort of to just 100, right? Where we can add value, right? Now, what that would look like in terms of revenue, right? I think we're too early to say, but but I think that's the target, right? 100 customers is more or less a target. 100 customers that are deriving value from the AI agents, right? Because that itself is a very new concept.
All right, Sahil, thanks very much for your time here on Startup Street, and thanks very much for sharing your thoughts with us. We wish you all the very best.
Yeah, thank you for having me as well, right? I really enjoyed the conversation. Yeah, thank you.
All right, now the Indian Met Department has warned of heat waves across large parts of the country, and the administrations of Kanpur and Vadodara have swung into action to protect a vulnerable portion of their officers, the traffic police. CNBC-TV18's Dhananjay Khatri reports that one small company with a patented technology has stepped up to help with its unique air-conditioned helmets. Take a look.
These are not your regular helmets because each of these comes with an air conditioner built into it. To beat the heat, state government of Uttar Pradesh and Gujarat have entered into a partnership with a Telangana-based startup firm Just Safety to provide AC helmets for the traffic police personnel. While 350 helmets have already been given to Vadodara City Traffic Police, and now 7 helmets have already been given to the Kanpur City Police, and this is expected to be rolled out in major other police commissionerates as well. These specially designed helmets come with a patented cooling design that uses battery-operated solid-state cooling technology. So unlike a regular AC or a refrigerator, there is no compressor or a condenser. Each helmet weighs around 200 grams, costs 12,000 rupees and boasts a rechargeable battery that allows 10 hours of use.
This is essentially a portable form of an air conditioner. The air conditioner weighs only 200 grams, and this air conditioner is then fitted onto a helmet, such that the person can wear it on the head like this and have the air conditioner flow around the head, keeping the person comfortable while working at say 40 to 60 degree ambient temperatures, working near heavy machinery, working outdoors near the sun, etc., keeping the person comfortable.
The feedback from trial runs have been positive, and Vadodara's Chief of Traffic Police DCP Jyoti Patel says the force has purchased 450 such helmets already and plans to order more. It is also looking at other accessories that will help personnel beat the heat.
We are even thinking of having AC jackets for the police. We are still on the trial run. We have invited a few manufacturers who are having AC jackets. So if AC helmets would work, we may even get AC jackets for them.
Just Safety, which has designed and manufactured these helmets, says the product has passed European and Indian safety tests and so is safe to use, especially since the low-power application eliminates the risk of mechanical failures or short circuits. The Kanpur police has also begun a trial run of these helmets.
अभी हमने ट्रायल के तौर पर 7 हेलमेट हम लाए हैं और हम अपने TSIs और कांस्टेबल्स को पहनाकर इसका ट्रायल कर रहे हैं. उनका हम रिव्यू ले रहे हैं ताकि इस विकेट की गर्मी में यातायात के साथ साथ हम उनका भी ध्यान रख सकें.
Just Safety is also in talks with other police departments for its AC helmets and hopes that these devices will help prevent traffic police who spend long days in the sun in the course of their duties from succumbing to heat-related ailments like heat strokes. In Mumbai, Dhananjay Khatri.
And before we wrap, let's take a look at some of the global news. Electric vehicle company Tesla witnessed the biggest revenue decline in more than a decade in its first quarter, dropping 9% on an annual basis. This was largely driven by a decline in vehicle deliveries and price cuts undertaken by the company. However, CEO Elon Musk told analysts that the recent job cuts were a necessity. He also added that the company wants to fully utilize its current capacity of close to 3 million units before investing in new manufacturing lines. This casts a degree of doubt on EV giants' proposed investments in India and Mexico.
Okay, on that note, we're going to wrap up this edition of Startup Street. Thanks for watching, but stay with CNBC-TV18. More news and updates will continue on the other side.